Traders, welcome back to a video on my channel called Friday University. What I'm going to discuss in this video is a stock ticker and a day trading opportunity for short traders. So I'm just closing out my video screen. I'm going to close out my position size calculator for the time being, and I just wanted to introduce the chart CEMI, which had a gap up today in the pre-market to create this void on the chart on the 1 year 1 day for the stock. And the 1 year 1 day means each of these candles, green or red, represents 1 day of trading action, and this is a 1 year view from all the way from today, a year ago. And as we can see, this stock has had ups and downs, ups and downs. So when you're reading it or trying to get an estimated hypothesis for when you're trying to trade, I like to notice key levels of support and resistance. I do this because I think that history repeats itself. So in this case, this stock has had some times where it has had green runs, but has retraced back and created this sort of pattern where it goes up and retraces. But sometimes it's not a continuous day, up, up, up. It'll be a 1 day pump up and dump, as we saw in April of this year. So that's what I think happened with a lot of traders, where they saw 625 to 6 being key level of resistance. So when the stock went up in the morning, let's get a 5-day, 5-minute time frame and remove all drawings to help you all visualize just the chart with volume on the bottom, which means the amount of buying and selling active at the time, and a 5-day, 5-minute, so each candle represents 5 minutes of action. I think people were excited to short because of the chart history representing on April, as we just saw, that action where it went up and then followed with a bunch of red days. Right, here's what I'm referring to. So when we look at today, and we see that similar thing, I think a lot of people were ready to short, especially being a little bit off the pre-market highs. But you have to be willing to take that chance and be patient, or try and get in here, or wait if you're shorting, which means you're hoping the stock goes down, which wasn't the case. So it broke out from 4, pumped up all the way to 7. So 7 is pretty much the resistance of the resistances today, which prevailed. And let's see if on the 1 year we could have identified 7. So it actually broke above 7 a couple times. However, it never held above 7. Here it tried, boom, below. Here it tried, did break above, but it failed to hold it as support. So 7 prevailed. Even though it did once, I don't know if I would have wanted to short here. Maybe the double top action, and that showed that the bears can reverse the trend. And I think a lot of people tried shorting early because they knew that they would be right eventually in the long term, but short term they were wrong, and that caused them to get squeezed, especially if anyone shorted in this area. The price already opened above where they shorted, causing more people to buy and cut out. So the best plan, I think, and I like now the journal exactly how this goes down on a $20,000 account. Let's say we were able to get in around 6, close to the highs, not quite the highs. Our target price is actually below that entry price because we're shorting the stock. So we're going to go for around $4 because we want to aim for a big return, and we also want to hope the gap fills reverse. So we're betting on the history where it goes down to repeat. And because I'm aiming for around $2.50 a share, let's risk around $1 a share to make a 2.5 risk to return. So let's go to 7.6. So we can take a 400 share position, which I like that. We're risking $400, which is 2% of our account, to make potentially $1,000. I like the math. So let's see where 6.6 would have prevailed as a good entry price with 7.6. And you got to hold it, and you also got to just be patient, because sometimes maybe you'd even want to get in here at 6, but you have to then give more risk to the, or loosen and give the stock more breathing if you did short here at 6 or here and you thought that was it. Or even if you were in late and you were like, okay, I'm going to get in here at 6. It's important to realize many things can happen. There are many factors that you take when you make a trade. However, the key is to make a plan that you feel fits. Even if you got in at 6-4 and you took a smaller share position, but you're still risking the same amount, you're just giving it more room to breathe. Maybe you want to win and you want to get more confidence by having a higher success rate. So all these factors are in play. But hypothetically, just looking back on it now, I think shorting around 6-5, 6-6 is the best play. Just because that was below 7, you're still giving it room to breathe, and the run of resistance from this day said that around 624 was key resistance. So I mean anything above that would be ideal short region. And then obviously it's still trending down, but the target price did not hit yet, so you just got to be patient. So that's my recap on CEMI. I know I wanted to throw a lot of in there for if you're in the position of trading it, and I hope that I will be the one making these trades so I can show you real time what I did at exact points, and that'll even help you all learn even more. So thank you for watching, and until next time.